A lot of people think this is how you mine Bitcoin, but you don't need a flamethrower to buy, sell, or trade Bitcoin and crypto safely. You just need FTX.
I'm reloaded. I'm reloaded.
Hey, Binance walking away? Hey there, Sarah. Yeah, that's right. Wall Street Journal reporting that Binance is walking away officially from that FTX deal. It says here Binance's issues are beyond our control. To help, they're citing a company statement. We don't have that statement quite yet. Again, this is according to Dow Jones. Binance cites due diligence reports on mishandling of FTX customer funds for dropping that deal. Again, this was a letter of intent, non-binding, so they didn't have the obligation to go through with this deal. It was up in the air. We'd had reports all day coming out that they may not go through with it, but it looks like officially the company's saying via Wall Street Journal, there's a statement out there that they are not going to go through with this FTX bailout.
Wow, Kate Rooney, Kate, thank you. Bitcoin falling now almost 10%.
Wall Street Journal reporting that Binance is walking away officially from that FTX deal. It says here Binance's issues are beyond our control.
So don't be so hard on yourself. You don't have to be perfect. You are exactly how you're meant to be.
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.
All right. Today is Wednesday, November 9. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. What a day, what a day, what a day it was. You're not going to find this kind of action in Netflix or action movies. This is why we trade the stock market. Unbelievable action. We're talking about companies worth, what, 20, 30, 50 billion dollars blowing up in a single day? Trillions and trillions of dollars being lost in a matter of weeks. Unbelievable. We're going to talk about this and a lot more. But before we start, how about we give you an update on the elections? We're done with the elections now, the midterms. And look, this was my prediction right here. As you can see, the states with the races on are the ones in beige or granite, whatever that is. And my prediction was the Democrats get Washington, Arizona, Colorado, Georgia, and New Hampshire. On the other hand, the Republicans take Nevada, Wisconsin, Ohio, Pennsylvania, and Florida. Well, here's what's actually going on right now. We don't have a call in Nevada, Arizona, or Georgia, but for the most part, my calls are pretty much spot on, with one big exception, and that is Pennsylvania. Pennsylvania flipped blue, and John Fetterman won. He's going to be a senator for 6 years. I mean, I knew that we had a problem with vegetables inflation, but come on. Anyhow, we got 3 races here that are not called yet: Nevada, Arizona, Georgia. But let's be honest here, when it's all said and done, the most likely scenario is Nevada goes red, Arizona goes blue, and here we are, we have 50 for the Republicans, 49 Democrats. We go in the runoff in Georgia in December, and that will seal the deal. If it goes Republican, look at this. All in all, the Maverick for Wall Street was right. Republicans 51, Democrats 49, and the difference is in the formation. Instead of Pennsylvania going red, Georgia goes red instead. But if the Democrats win Georgia in the runoff, well, we got the same situation that we got right now, 50-50, with the vice president deciding the ultimate vote. So the Democrats take the majority. Same story that it is right now. But here's the 3 takes, or let's say 4, that I got from last night's elections. Number 1, in any business deal, when both parties feel a little bit happy and a little bit screwed, that is a sign that this is a good deal. And so far, the Democrats feel a little bit happy because the red wave that everybody talked about is not happening, and they can breathe a sigh of relief. On the other hand, they're a little screwed because they might end up losing the House and the Senate by the end of the day. The Republicans are upset right now. They feel a little bit screwed because they were promised a red wave, and the red wave did not happen. But in a few days, they're going to feel a little bit happier because they might end up winning the House and the Senate. So all in all, I say this was a good outcome for everybody. Everybody feels a little bit happy, a little bit screwed. And take number 2. We talked about the economic issues and the importance in the ranking according to the polls. And again, in the exit polls, voters agreed that the number one issue facing the country right now is inflation, the economy. But this country is so divided to the point where nobody wants to cross the aisle and vote for the other team, even though the economic situation is choking them right now. But they rather stick with the team. The Democrats stuck with their team. The Republicans stuck with their team. Independents pretty much went 50-50. And there you go. We got a divided country, a tribal kind of politics. It is what it is. But I got a lot of messages from the Republicans, but they're not happy. They feel that this was a bad night. And I say, honestly, Republicans should be relieved. A red wave did not happen. Who wants to be held responsible for the upcoming and greatest economic downturn in our lifetime? ? Folks, the economic collapse, the recession is going to happen either way. With Democrats, with Republicans, it is inevitable. But do the Republicans really want to have a majority in the House and the Senate? Because when the recession happens, they can no longer use the excuse that, hey, this is Uncle Joe's problem. The Democrats are responsible for this. Now the Republicans are also responsible for the recession. So I say the Republicans should be relieved that the red wave is not happening, and they must be praying right now that they're not going to win the Senate. Take number 3. This was a major defeat for Trump. And I'm not talking about his candidates losing and any of that. That's not what I'm talking about. This is, of course, what the New York Times is talking about. I don't care about any of that. What I'm talking about is how the stock market reacted today. The Trump SPAC initially popped up higher by 60% when we got the rumors that Trump is about to announce. Today, the same stock, DWAC, Dwack the Quack, went down by more than 20%. Is it because his candidates lost? I don't think so. Is it because the Republicans had a bad night? I don't think so. Here's what I really think. It's all about DeSantis in Florida. You see, the red wave happened. And it happened in Florida. Ron DeSantis smashed all expectations and won big, like it wasn't even close. It was a red wave in Florida. And now the Republican voters are saying, you know what? Trump is the old, DeSantis is the new. The donors are saying the same. And soon enough, the party itself is going to go with DeSantis versus Trump. And boy, if we get Trump versus DeSantis, you want a sure bet in life? Go ahead and buy as much popcorn as you can. Because if it goes down between Trump and DeSantis, there's no amount of popcorn that would be enough to watch this shit show. And of course, now the talk becomes, forget about 2022. It's all about 2024. And the market is going to start thinking about 24, forget about 22. And what we knew from last night is the Democrats have a stronghold in Colorado, but the Republicans have a stronghold in Florida and Ohio. These two states are becoming safe red in the bag for the Republicans. And then we have the toss-ups in Wisconsin, Michigan, New Hampshire, Pennsylvania, Virginia, North Carolina, Georgia, Arizona, Nevada. But here's why this is important. With Ohio and Florida in the bag, the Republicans enter the presidential elections with a lead, 217 to 210. And this is really important. Nobody's paying attention to this right now, but in the next few days, they will. And folks, we have to end with a positive message here, and this is my fourth take. Forget about red and blue, it's all about the green states, baby. And I'm talking about relaxation laws. Yesterday, voters approved more relaxation laws in Maryland and Missouri, or Missouri, whatever floats your boat. And when we look at the map, look at this, green across the board with very few exceptions. Idaho, shame on you. Nebraska, you too. And when a lot of you say, hey, Maverick, why don't you move to Texas? Freedom. Really? What's Texan about low THC? Shame on you too. But the good news is, while we live in a divided country, red and blue, we can all unite under the green banner. And that's the take of the day. Anyhow, let's move on here because we got a lot of stuff to talk about. So without further ado, here it is. In focus tonight. How about the epic collapse in FTX, a Lehman moment in crypto, and then Elon Musk in a world of trouble. And last but not least, the mass layoffs at Meta. We start with the FTX situation, and here's what's going on. Sam Bankrupt-Fried lost 94% of his entire net worth in a single day. Unbelievable. The fastest and the biggest loss of wealth in history. All of these billions of dollars, poof, gone. And the demise of Sam is really sad. Here's a young man who was at the top of his world just last year in the list of 30 under 30, net worth north of what, $20 billion? The new Warren Buffett, they said. Fast forward a year later, and the collapse, the demise is rapid and mind-boggling. And it's not just going to stop here. The man might end up being in jail. The United States government is now probing FTX empire over handling of client funds and lending. See, Sam came out and said, whatever turbulence we might be going through, the client cash is secure. It's fine. You don't have to worry about your cash at FTX. The problem is he was misusing clients' cash to cover up for all of these problems that FTX was going through. The liquidity problem, the insolvency problem, and now even the SEC waking up from the coma. And they expanded an investigation into cryptocurrency platform FTX. And I say the SEC must be investigated for failure to protect investors from obvious Ponzi schemes. The SEC has been in a coma for years by design to allow Wall Street sharks to feast on mom-and-pop investors. It has been the case since the 1980s, when the government decided to defund and deregulate the SEC. And of course, Gary Gensler, he's in a coma, not doing anything at all. It's the Wild West in the crypto market. It's the Wild West in the stock market. No wonder why we're seeing things blowing up like we have never seen before. And the problem with Sam Bankman-Fried is he opened his mouth and said this in front of Congress. Take a look.
Last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there is complete transparency about the full open interest. There is complete transparency about the positions that are held. There is a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this.
Jake is in a lot of trouble right now.
And yesterday, everybody was excited that Binance is bailing out FTX. Crisis averted, nothing to see here. Fast forward to today, and Binance is backing out of the deal. Nobody's going to bail out FTX. Binance says the company is under investigation. Binance says we had no idea that FTX was misusing clients' cash. So they're out. And now we're going to see the collapse of FTX, whatever that entails. Whatever mini blow-ups we're going to see because FTX is going down. You see, the problem here is who's going to bail out FTX? Think about it this way. Sam Bankman-Fried has been bankrolling and bailing out all of these failed crypto exchanges. Now he needs a bailout. The problem is FTX was the lender of last resort in the crypto market. Think about it this way. What's going on in the crypto market right now is the equivalent of JP Morgan blowing up. Who's going to bail out JP Morgan? The only bigger institution is the government. Is the government going to bail out FTX? I doubt it. So it's going to go down, and many other entities will go down with it. And now as we lift the rock of FTX, we're starting to see who are the cockroaches who are hiding under this rock. One of the cockroaches is Novogratz Galaxy Digital. That's going to blow up. And how about the funders and the investors in FTX? Be it Sequoia, be it Tiger Global Management, be it SoftBank, be it BlackRock, and numerous other venture capitalists and angel investors. They're going to go bust. They're going to take massive hits here when it comes to the equities market. Coinbase. That's going to blow up. How about Robinhood? Sam Bankman-Fried tied Robinhood to FTX. He bought a share of Robinhood. That's going down. And I say I'm taking every penny I have in my Robinhood account out. That thing will blow up next. Forget about might. It will blow up. And among the casualties of the blow up of FTX, not just investors, hedge funds, banks, other stocks, but also all of these celebrities who went all in on cryptos. FTX, among them Tom Brady. And I say Giselle got out of the trade in a timely manner. Goodbye. She saw it coming. And as Bitcoin collapses, what's going to happen to drunk Michael Saylor from Micro Tragedy? Yep, that's another one that's going to blow up. And of course, Binance says, hey, we didn't have any master plan behind FTX's demise. We're not gloating or anything here. And I say, Binance, you better watch your back. You're next. And that's going to be the mother of all blow-ups in the crypto market. And look, I've been warning about this for a long time. Last year, and even before last year, I said the culties who invested in tulips hyped up by the fraud father, aka Elon Musk, are now losing their money. It won't be Doge alone. Bitcoin and Tesla stock are next. The culties continue to worship the leaders, blaming whales for the crash instead. And again, just a reminder, throughout the insane mania that took place in 2020-2021, this channel refused to participate in the mania at the expense of hurting the channel. And instead, I decided to warn investors that this is 1999, the dot-com bubble all over again. And it's going to end the same way. And I have produced numerous videos in the past warning against the tulip market, warning against cryptos, warning against Bitcoin, warning against the meme stock mania. And all of these manias are coming down crashing right now. I could have made over 200,000 subscribers right now had I went along with the program of pumping tulips, pumping meme stocks and trash. I decided not to do that. I decided to go with the long run, with the long-term investment. If I tell my viewers, yeah, cryptos are good, it's the future, bro. AMC will go to the moon. The mother of all short squeezes is gonna happen. I might have been rewarding in the short run, but in the long run, my viewers will be bankrupt. So I feel vindicated. But I also feel sorry for the mom and pop investors who are losing their money right now, be it in cryptos, be it in the stock market, in meme stocks or whatever. It's not what I wanted. My goal was to make investing in the stock market appealing to the retail mom and pops for the long run to achieve financial independence. But unfortunately, the mom and pops, once again, when the retail investors joined the market, they gambled. They treat it as a casino. Even though we have history, we have the dot-com bubble about, 2 decades ago? And people say, oh, this time it's different. It's not going to happen the same way the dot-com took place. It's the same psychology all over again. And this is the problem with retail investors. And of course, it is saddening and heartbreaking because we want retail investors to be participants in the stock market for the long run. And this is the only way we can turn the tide against Wall Street and reclaim the people's market. But unfortunately, this is not going to happen anytime soon. And since I took a jab at Elon, let's throw some more jabs here. Because Reverend Elon is in a world of trouble right now. He got himself into something he cannot get out of easily. And I said before, this will be the beginning of the end of Elon Musk. Number 1, by acquiring Twitter, he alienated a group of very powerful people, the group that runs the country. They don't want Twitter to be a free speech platform. That goes against their agenda. And they're going to punish Elon. They're going to make him feel the pain. That's number 1. Number 2, Elon is out of his mind right now. He completely lost it. For one thing, Twitter remains a non-free speech platform. The censors are still here. But most importantly, see, a market commentator like me has to be careful not to alienate Republicans or Democrats. I try to be as neutral as I can without being boring, so I have an opinion. And I'm going to say my opinion. But again, I'm a market commentator doing a show from my garage. I'm not running a multi-billion-dollar business like Tesla, which, by the way, the consumers of that company happen to be Democrats, liberals in the coasts. The people who buy Teslas happen to be majority Democrats. But this guy goes on Twitter and alienates his core consumers. A lot of folks now say I want to buy an EV, but I'm not going to buy it from Elon Musk. The rise of Tesla was due to the brand of Elon Musk, an innovator, a smart guy, the Edison of our generation. Now this brand has been tarnished, and it's going to tarnish Tesla's brand. And if that was not enough, Twitter is now bleeding money, millions and millions and millions of dollars every single day because the advertisers are out. And Elon has to bankroll the company. He has to pay the employees, he has to pay the bills, and his piggy bank, the ATM, is Tesla stock. And while he said he's done with dumping Tesla shares, he's now dumping more. In an SEC filing today, Musk declared he sold around 19.5 million shares over the course of 3 days in November, worth around $3.95 billion. Tesla shares are down nearly 49% year to date. Wow. It's going to get worse for Tesla stock as he continues to dump. Somebody got to bankroll the company if it's not generating revenue. And when will the bleeding stop? To begin with, Twitter is a mess right now. We don't have free speech, but on top of that, he keeps experimenting. He got a gray official label in the morning. By the afternoon, he took that off. And Elon says, please note that Twitter will do a lot of dumb things in coming months. We will keep what works and change what doesn't. Meaning, in the upcoming months, he's not going to have any ad revenue. Which company wants to advertise in an experimental platform? Nobody. In other words, he's going to keep dumping billions of dollars worth of Tesla shares. And I say thanks for the heads up to double down on Tesla shorts. It's in the bag now. And even after the experimenting is done, Elon Musk managed to alienate all of these advertisers. He says the content is actually improving. It's not getting worse. I don't see a difference right now. And earlier today, Reverend Elon came out and said to the car manufacturers, rest assured Twitter is not going to be a biased platform for Tesla. He's not going to use the platform to pump Tesla at the expense of GM, Ford, or whatever manufacturer it is. Now, car manufacturers happen to be one of the biggest spenders on ads, be it on YouTube, Facebook, Twitter, doesn't matter. So now Elon is begging GM, please don't stop the ads. What a turn of fortunes. Sam Bankman-Fried is homeless right now. Elon Musk is begging GM, the dinosaur he used to make fun of. Wait till you hear the next story about Mark Zuckerberg. We'll talk about that in a minute. But when it rains, it pours for Elon Musk. Today, the President of the United States, Joe Biden, came out and said that Elon Musk's ties to other countries should be looked at over national security concerns.
What a stupid son of a bitch.
He says Elon Musk is a national security concern, a South African immigrant, and specifically he says that his ties to Saudi Arabia is the problem here. And in defense of Elon, I say if Elon Musk is indeed a national security threat, then I think our entire intelligence structure must be investigated and reprimanded. They allowed the national security threat to fly our spy satellites to space for years, and nobody said anything about it. Nobody said that Elon Musk is a national security threat. But now that he's taking over their public manipulation tool, the propaganda machine, all of a sudden Elon Musk is a national security threat. And speaking of egotistic asshole billionaires, how about Mark Zuckerberg, who came out today and laid off 13% of the entire workforce at Meta, formerly known as Facebook. 11,000 employees. Goodbye. You're fired. And you want to hear what Mark Zuckerberg said to his employees before he fired them? Of course, he had the makeup department to make him look sad and, use the eye drops to make him look like he's crying. And here's what he said.
I mean, I know that there must be just a range of different emotions. I want to say, up front, that I take full responsibility for this decision. I'm the founder and CEO. I'm responsible for the health of our company, for our direction.
And this is all bullshit. He did not have to lay off 11,000 employees. All what he had to do is to admit that he's wrong. This lunacy he calls the metaverse is done. The investors say they don't like it. The public says we're not into it. His peers say it's a stupid idea. But no, he's not going to let his ego go down. He'd rather punish the employees and get rid of them to fix the problem with the company, the margins going down, to fix the stock price that is down 80% from the top? But no, he's not going to waver when it comes to his ego to say, you know what, folks, I was wrong. I had this fantasy called the metaverse. Now I realize it's a stupid idea. We're abandoning this. We're going back to the ads business. And boom, Meta stock shoots up higher, 20, 25%, even 30% in a single day. And he doesn't have to lay off 11,000 employees. But here we are. And it's not just Meta, folks. That tsunami of layoffs is coming. Redfin is now cutting 13% of its staff. Poof, gone. And many more companies. Every single day we hear company after company after company announcing layoffs. And of course, the morons at the stock market, these pigs who call themselves bulls, they're not really bulls, they're idiots. They think that that's good for the stock market because it makes the Fed say, oh, we're seeing unemployment rising higher. We don't have to raise interest rates higher anymore. But you forgot about the recession part. You forgot about the economy blowing up part. You think that's bullish for the stock market? What the hell is wrong with you? But here's what I say. The fact that Meta stock is surging on layoffs, optimism, should be extremely concerning to everyone. Now corporate leaders are realizing that there is an easy way to please investors. Conduct mass layoffs. Remember the stock split mania? Every time a company wanted to pump its stock higher, they announced a stock split, and boom, the stock surges higher. Well, now we have another mania that's about to hit, and it should be concerning, as I said, the layoffs mania. All of these CEOs, CFOs are going to look at the charts. They see their stocks down big. Investors are livid, and they continue to dump. How do you please your investors? Announce mass layoffs, cutting down expenses, improving margins, the stock shoots up higher right away. And this is going to be dangerous because we're going to see a tsunami of layoffs as company after company after company realizes that the exit door here is conducting mass layoffs. And with that lovely outlook for the economy, let's move on to cover the stock market information for you. And we begin with the closing of the indices today. And here we go. The Dow Industrial Average down big by 646.89 points, or a decline of 1.95%. The Nasdaq leading the pack to the downside, down by 263.02 points, or a decline of 2.48%. The S&P also down in the red by 79.54 points, or a decline of 2.08%. When we look at the sector's performances today, all down, shame on all of them. No metals today. And the laggards were led by energy, cyclicals, and technology. And when it comes to the advance to decline ratios, NYSE 12% advancing versus 86% declining. The Nasdaq 18% advancing versus 80% declining. On to commodities. Crude was down big. They continue to downgrade the outlook. The question becomes, when will the aggregate demand kick in? The WTI was down almost 3.75%. Brent was down almost 3%. Natural gas, gasoline, heating oil all down by almost 3% for the day. And we're using trading economics here. We're not using FinVits, at least for today. So they lump softs and grains together. So we have lumber moving up higher by about 2%. OJ also scoring gains for a little over 1.25%. Coffee remains down. It continues to go down, beat under 1% today. Cotton down a little over 1% for the day. Cocoa flattish for the day, even though massive rally for cocoa in the last few days. And when it comes to grains, we have declines for oats and wheat, and even corn was slightly down for the day. But going back to softs / grains, sugar, the rally continues. We talked about India banning exports. Sugar futures scored more gains today, worth about 2%. When it comes to metals, the dollar was up for the day. Not by a lot, but this is bad for gold, bad for silver, bad for copper, platinum, palladium, all down for the day. But again, it's all about the CPI. If the CPI comes out cool, or whatever that means, meaning pleasing to the stock market, let's say below the estimates of 7.9% year over year, even though the most important number is month over month, and the estimate for now is 0.5%, also known as half a percentage point. Anything below that, the dollar is going to go down big. We will see metals shooting up higher, and vice versa. And lastly, when it comes to meats, what's going on here? Muted action across the board. Feeder, live cattle futures, lean hogs, no major moves here at all. Moving on to the big casino, the options market. What's going on here? The hottest table by far remains Tesla, and a lot of blood in this table, down 7% today alone. So far for the week, down almost 20%. And today, about 2.8 million contracts traded today. About 51% of those were puts. Meta, number 2, at around 1.5 million contracts traded today. About 50% of those were calls. And Amazon at number 3, with around 1.5 million contracts traded today. About 52% of those were calls. Now, let's move on to the unusual activities that took place in the options market today. We start with the ticker AAPL Apple, aka the Big Kahuna. Somebody sees more declines to come here, and they bought the 120 puts for the expiration date, December 23rd, with the expectations that Apple could go down and lose more than 11% of its value by then. They paid around $2.20 a piece to enter this trade, all in all spending around $4.5 million. And then what about the ticker TSLA, the Souffle? Somebody sees a rebound coming here, at least in the short run, short covering, oversold rally, whatever it is. And they bought the 190 calls for the expiration date, November 25th. And the expectations are that Tesla can score gains of more than 7% by then. They paid around $5.30 a piece to enter this trade, all in all, spending around $6 million. And then what about the ticker IWM, the Russell 2000? Somebody sees more downside coming, and they bought the 165 puts for the expiration date, December 2nd, with expectations that the IWM could go down and lose more than 5.5% of its value by then. They paid around $1.75 a piece to enter this trade, all in all spending around $1.75 million. And then what about the ticker NOVA, Sonova? It lost about a third of its value since the year started, and somebody sees more pain coming here. They bought the 17.5 puts for the expiration date, December 16, with expectations that the name could move down and lose more than 9% of its value by then. They paid around $1.30 a piece to enter this trade, all in all spending around $1.3 million. And lastly, perhaps a sign for the bulls here that maybe the CPI, aka the CPI, might come out light, and we see yields going down, equities going higher, and bonds shooting up higher, aka the TLT shooting up higher, and they're doing so by buying calls, in this case the 101 call for the expiration date, January 20, with expectations that the TLT could score gains of more than 7% by then. They paid around $1.25 a piece to enter this trade, all in all spending around $1 million. Moving on to the heat map analysis, what's going on here? A bloodbath, a sea of red across the board. You can't really extract anything here. Apple down, Microsoft down, Amazon down, Tesla down, ExxonMobil down, Visa down, everything is down, with very few exceptions, among them Meta. We talked about Meta laying off employees, and of course we saw some short covering reaction based upon that. But besides that, nothing to see here. But it is notable that after the elections, energy down big, metals down big, despite what the dollar did, doesn't matter. Both are down, hopes that inflation will go down based on a change in policy. But we also see the Chinese names down big, Alibaba, Pinduoduo, JD, Nvidia, Tesla, all down. And of course, the CPI will come out tomorrow and give us the real theme. For now, no theme here, it's a bloodbath. What about the heat map for the ETFs? Similar story here, a bloodbath across the board. Even commodities, but especially commodities, got hit hard today. The XOP, XLE, OIH, a bloodbath. Chips went down big. Tech went down big. Biotech went down big. Metals down big. Small caps down big. Growth, value, everything is down big. Even international markets are down big. Led by Chinese equities, FXI, MCHI, and Brazilian ETFs. The most notable one is the EWZ, down about 3% for the day. Nothing to see here besides the massacre. So we're going to move on to the charts, and we begin with the SPY, the S&P 500 30 minutes chart. What's going on here? Yesterday we talked about the bear flag pattern, and it's not really the cleanest or the neatest bear flag pattern. It's huge, it's out of control, but the moral of the story is the market remains in this mode, believing in the seasonality. Even though they get hit with earnings, they got hit with no pivot. Jerome Powell smacked them right in the face. The midterms are over. The CPI is going to be over. But the bulls continue to hold on that this is the time to buy. For whatever reason, doesn't matter what it is. So we have a retracement of the reversal that we got last week in the pivot massacre when Jerome Powell spoke. But this retracement will be met by what? People who could not get out at that time, they're now getting out at better prices. Pretty much the same prices as last week. And hence we see the turnaround and the move down. It stopped at 385.15, which happens to be a major resistance. And the chart went down, losing an important support of 379.5. And now it stops at the next support at around 373.5. Now, there is plenty of room if the chart wants to go to the downside. The RSI is not oversold at all. We could go down all the way to 368 or even 362.16. But it all depends on the CPI, so I'm not going to pay major attention here to the technicals, at least not today. And when it comes to the daily chart for the continuous contract for the S&P 500, again, the CPI will dictate where this chart goes starting tomorrow. But here's what we know. We know that the volume is moving higher, slowly but surely. We know the chart is losing momentum. Look at the RSI in negative divergence. Look at the MACD indicator about to cross and produce negative impressions on the histogram. And of course, we talked about the possibility of a reverse ABC pattern, which could take us all the way down to 3,600. But let's play the devil's advocate here. What if this is a larger cup and handle formation and the CPI comes out light tomorrow, the cooks do a good job, and we see the chart blasting higher? That is entirely possible. But is it the consensus here? The answer is not at all. Will we see systemic financial risk in the tulip market, things blowing up, margin calls all over the place? It's really hard to see anything positive here. On to the Qs, 30 minutes chart, what's going on here? Yesterday we talked about the possibility of an ABC pattern, which will take the chart all the way to lose 269.29 as support, aka the June bottom, and might take it all the way down to 261.69. Well, we got the ABC pattern, but we did not go all the way to 261.69. This could happen by tomorrow, but it all depends on the CPI once again. So we can look at the technicals all you want. At the end of the day, the algos are going to react based on the CPI. Now here's the daily chart for the continuous contract for the NASDAQ. What we know is the volume is moving higher, slowly but surely. On the downside, of course, we know the RSI is in negative divergence. We know that the MACD indicator is already showing bearish momentum. You see the red columns on the histogram. They're not definitive yet, but we're getting into that point. What if this is a reverse ABC pattern, which takes us all the way at a minimum to retest the lows from October? Another way we can look at the chart. If we clean it up and switch to a line chart, what if this is a head and shoulder formation? See, the SPY at least has some hope with the cup and handle formation, but nothing here in the Qs. It doesn't look good. Here's the IWM, the Russell 2000 30 minutes chart. We talked about the larger bear flag consolidation pattern, which should play out and take us all the way down to the support at around 174.45. Now, is this support going to hold or not? It all depends on the CPI. But if it doesn't, we go down all the way to 168.90. But if the CPI comes out positive, we go all the way up to the next resistance at around 183.25. The Dixie, what's going on here? The most important chart to watch, of course. For now, we have a rebound. We have positive divergence on the RSI, reversing the negative divergence, but no confirmation when it comes to the MACD. When we switch to a line chart, what do we see here? Is this a double bottom and higher we go from this point on? Once again, I hate to break it out for you. It all depends on the CPI. But gold seldom lies. Gold is the mature guy in the room. And so far, gold is consolidating in a bull flag pattern above the important numbers of 1,671, and 1,685. For now, gold says CPI comes out positive, dollar goes down. But what if the old man is getting fooled here? That is entirely possible. Here's crude oil Brent, a daily chart. What's going on here? We know the ABC pattern is getting a lot weaker, and the stronger argument is becoming the double top, which should take us all the way down to 85. But here's some hope for the bulls, oil bulls I'm talking about this time around. We have a trend line. What if the chart rebounds from the trend line exactly? What if it pops higher? That is entirely possible so long as the trend line remains intact. What about yields? The 10-year yield, what's going on here? Bond bulls, equities bulls, yield bears would argue that this is a bear flag consolidation pattern, negative divergence in the RSI, negative impressions in the MACD indicator. Sooner or later, the chart goes down. Now, what is the immediate catalyst that would make this chart go down? The answer is the CPI coming out positive. Now, the problem with this is the weekly charts remain positive, and the chart is still making higher lows. When we look at the TLT, a daily chart, the reverse ABC remains the outlook for now, but the bulls are fighting back. Look at the MACD indicator, look at the RSI, both in positive divergence right now, but it all depends on the CPI. Positive, TLT goes higher. Negative, meaning higher inflation. TLT crashes down, forming the C leg all the way down to 87.94. So now we talked about gold being positive for the bulls. We talked about the possibility of the dollar being positive for equities bulls. We talked about yields maybe looking positive for bulls in the stock market. But what's negative here for the bulls is the VIX. This is a 4-hour chart. Look at what's going on here. It is holding on to the support of 24.29, despite all the downward pressure that it has been on in the last few days. We see positive momentum on the RSI and the MACD indicator. So what this is saying is the volatility is about to move higher. And if it does, SPY goes down. Now, why would the volatility move higher? How about a hotter CPI? This is a sign in the bears camp. There are many other signs in the bulls camp. How about Apple? 30 minutes chart. What's going on here? Yesterday, we talked about a head and shoulder formation, which should take us all the way down to the support of 134.37, which happens to be a solid support for now. But this is the third retest of the same number. Third time a charm, meaning it breaks below? We'll see. How about Tesla? 30 minutes chart. What's going on here? The bear flag is playing out and got us down all the way to 180. 180 did not hold, and now the chart is touching the trend line, which also happens to be the lower edge of the bearish channel, exactly to the penny. If we zoom out, here it is, a line chart. As you can see, Tesla all the way down exactly to the lower bound of the channel. Can it hold? Can it provide support? Can it provide short covering? We'll see what happens tomorrow. This is what the bulls are hoping for, of course. And lastly, Bitcoin, tulips. What's going on here? Big flush down. Look at this. A crash almost all the way down to my number of 15,000. Now, it's getting a little oversold here, but what basis? What are the bases for a rebound here? I say let's go all the way down to 15,000 and see how that holds. Because if it doesn't, we zoom out to a monthly chart of Bitcoin and look at this. We have a trend line. And if the chart goes all the way down to the trend line, that would be a decline of over 50% from this point here. And Bitcoin would be trading at around the 7,000 territory. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have the CPI, aka the CPI. All eyes on the CPI. And then we have a bunch of Fed zombies speaking, who cares? Kashkari, Waller, John Williams, blah, 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 blah. And with that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. And I will talk to you again tomorrow. Take care.
Stay wide open, you silly brain. Enough of this.